Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Monday, the 3rd of November. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, oil prices rise as OPEC Plus announces plans to pause output increases for the start of next year.
The UK's Chancellor Rachel Reeves considers a range of tax hikes targeting the country's wealthiest.
Plus, how China's efforts to unlock a huge African iron ore deposit risk upending the global market.
Let's start with a roundup of our top stories.
The price of oil has risen for a fourth day after OPEC Plus announced plans to pause output increases at the start of next year. The group and its allies say they'll raise production by about 137,000 barrels a day in December before taking a break from January to March. The move comes as the market contends with growing concerns about oversupply that have driven the price of Brent down by around 10% over the past 3 months. Here's the view of Vandana Hari of Vanda Insights.
We are probably in an oversupply situation, but how much oversupply? I think the jury is still out on that. And on the flip side, you have supply risk premium, which has come back in a major way into the market after the US and EU sanctions on Russia a couple of weeks ago.
Vandana Hari referring there to sanctions on Russian oil exporters as traders tell Bloomberg the restrictions are now prompting Chinese refiners to avoid shipments from the country.
Here in the UK, a 32-year-old man is being held on suspicion of attempted murder after a mass stabbing attack on a train over the weekend. The attack happened on a high-speed service from Doncaster to London, leaving 11 people in hospital and some with life-threatening injuries. The train was stopped at Huntingdon in Cambridgeshire. Audrey McAdam is the town's mayor.
This is just out of my mind. I'm totally out of it at the moment. I'm sorry to say. I cannot think straight at the moment. It's a horror film, complete horror.
Audrey McAdam speaking there as police say that the motive for the attack remains unclear. Authorities say there is nothing to suggest it was terrorism related.
The UK's Chancellor Rachel Reeves could target the country's wealthiest with exit and mansion taxes in her upcoming budget. The measures are on a long list of possible options being considered by the Treasury to fill the fiscal hole. Our chief UK economist Dan Hansen says the Chancellor faces a challenging outlook.
I think Rachel Reeves, listening to her rhetoric around this budget, she's very conscious of the inflation story now, and I think probably in hindsight wouldn't have gone through with some of the policies she went through in October last year in the budget last year, because there has been an inflationary impact.
Bloomberg's chief UK economist Dan Hansen there. Bloomberg understands that the Chancellor will only decide which tax rises to implement once she receives the final fiscal forecast from the budget watchdog. The Bank of England is expected to hold interest rates at 4% on Thursday, slowing the pace of policy easing that it began last August.
Now, US President Donald Trump has threatened military action against Islamist extremists in Nigeria. In a post to his Truth Social platform on Saturday, Trump also threatened an immediate cut-off in aid to Africa's most populous nation. The move comes after the US President said that he was designating Nigeria a country of particular concern because of worries about the safety of Christians. This was last week. Nigerian President Bola Ahmed Tinubu rejected President Trump's criticism, saying on social media the country is, quote, a democracy governed by constitutional guarantees of religious liberty. Tinubu has been under pressure this year from a rising Islamist insurgency in northeastern Nigeria.
China will effectively suspend the implementation of new export controls on rare earth metals and end investigations into American companies in the semiconductor supply chain. The White House issued a fact sheet over the weekend with some details of the trade pact agreed last week by Presidents Donald Trump and Xi Jinping. But US Treasury Secretary Scott Bessent has warned that Washington must still be cautious.
I think, and I hope, after the agreement and the goodwill between President Xi and President Trump in Korea, that we can depend on them to be more reliable partners, and the rest of the world can depend on them. But we can't take that chance. We don't want to decouple with China, but we're going to have to de-risk.
US Treasury Secretary Scott Bessent speaking there. Meanwhile, China's manufacturing activity expanded less than forecast in October, according to a private survey, adding to concerns about the economy's slowing momentum.
Now to European companies, which are proving surprisingly resilient, with their results showing that they're navigating US tariffs a lot better than anticipated. Bloomberg's Michal Kubala has more now.
It turns out tariffs aren't biting European exporters as hard as many feared. A Goldman Sachs basket of stocks most exposed to the American levies, names like BMW or Adidas, jumped 6% in October, double that of the broader Stoxx 600. Some firms, including Hermes and Unilever, even credited sales growth in the United States for their ability to beat estimates. The optimism is showing up in forecasts. Bloomberg intelligence data shows earnings on Europe's key benchmark could grow by double digits next year. In Brussels, Michal Kubala, Bloomberg Radio.
And some breaking earnings news this morning. Profits at Ryanair beat expectations in their second quarter. After-tax figures came in at €1.72 billion versus expectations of €1.67 billion. Passenger numbers for the first half of the year were broadly in line with expectations at 119 million. Ryanair now sees its full-year customer numbers at 207 million. That's an increase from its last forecast of 206 million, slightly above what markets were expecting.
And those are our top stories for you this morning. Well, November in the markets begins with some gains for stocks. We have the all-country world index up by 1/10%. We've also got stock futures for Europe up 0.2 and US stock futures also pointing higher. Oil has been gaining 0.6% higher for Brent crude futures at $65.18 the barrel after the OPEC Plus decision over the weekend. US yields are steady this morning at 4.07 for the 10-year. Gold has been fluctuating, but currently it is up by 0.3%. Iron ore and copper are down on concerns about China's economic outlook. And the dollar this morning on the Bloomberg Dollar Spot Index is weaker, 0.1%. Those are the markets.
In a moment, we'll bring you more on OPEC Plus's latest moves on oil supplies, plus what a massive new iron ore mine in Guinea means for the global market and for the country's economy. But another story that we've been reading this morning, the season finale of the Great British Bake Off is tomorrow, in case you didn't have it already marked in your diaries. And our colleague Georgia Hall has been writing about one of the many side industries that have sprung up around this TV show, and that's betting. She writes about the vast and potentially lucrative online betting market that exists around the series. Apparently you can get odds on everything from who will get a handshake from Paul Hollywood, one of the judges, who will win the technical challenge, and of course who's going to win the overall show at the end as well. Apparently there's been quite a shift in odds as the series goes on.
I love cake. Don't get me wrong, but I'm quite bemused by this ballooning betting story. That seems a bit sort of harder to swallow. I wonder who is it out there who's betting on cake baking. I don't know. I always am a little more concerned about in the UK just how many people are betting. The big survey that came out earlier this month of betting, a lot of people, 2.7% of people in the UK have got a betting problem apparently. But anyway, cake is perhaps a more fun side to betting maybe.
Yeah, I mean, look, it's the difference as well with this market, which is only growing in the US, because of course betting markets have only opened up in recent years as well. Yeah. So it's very interesting to watch how it's playing out on different sides of the Atlantic as well. Quite a problem betting on this programme because it's pre-recorded as well. So technically people could have insider knowledge as to who has actually won. But it is being seen as sort of a community building around a much loved TV show as well. So you can read George's piece on Bloomberg.com and we'll put a link to it in our podcast show notes.
Okay, let's talk about the oil markets. They face a great deal of uncertainty. Crude prices have been falling this year, and on paper, there is expected to be a big supply glut next year. So on Sunday, OPEC Plus said that it plans to pause increases in output from its members for the first quarter of next year. Stephen Stapczynski leads our team covering energy in Asia, and he joins us now for more. Stephen, good morning. What is OPEC's strategy? Because there is usually a gap between the quotas, what they say they're going to do, and then what is actually produced.
No, that's correct, actually. So OPEC Plus has been increasing output for much of this year, actually more than the market was expecting them to in terms of what they're saying on paper. Now, you're right. In reality, they're not always hitting those targets. Some countries are struggling to increase their output to hit that level. In fact, one of the few countries that can actually really meaningfully increase output and has a lot of spare capacity is Saudi Arabia, the de facto leader of OPEC itself. Now, in terms of what happened with this meeting, I think one thing is Russia. Russia is a member of OPEC Plus, and just recently we had the Trump administration slap sanctions on two of the largest exporters. That was Rosneft and Lukoil. And then we have the stories from last week and then this week about Indian buyers and Chinese buyers who traditionally were buying Russian oil. They're looking at perhaps shifting their supply away from the sanctioned barrels in order to avoid any sort of hit from the West or from the U.S. For importing that oil. And so because of that, it is likely seen that maybe Russia in the OPEC Plus meetings had pushed for a pause because they're unable to increase their output, especially if at the moment buyers are kind of scrambling to move elsewhere. Now, this could be digested. Maybe there will be more dark fleet ships taking that supply. Maybe other refineries will be willing to risk retaliation from the West. But at the moment, I think it does make sense that OPEC Plus would move for a wait-and-see situation, especially since, as you know, when you look at the macro situation for oil, we are facing a bit of a glut for 2026.
Yeah, indeed. There's several of those dynamics, of course, as you say, playing out in the market too. There is a meeting coming up, though, between Donald Trump and the Saudi Crown Prince Mohammed bin Salman as well. What could emerge from that might be of interest to the oil markets?
Well, certainly if you can see some sort of OPEC movement to increase output or anything there would be quite interesting. Now, of course, it's really unlikely that could happen because you had these OPEC Plus pause and they are working in unison. That being said, you know, you could see some broad general statements from both sides saying that they're working to really balance the market. I think when you look at what Trump wants, certainly he wants low gasoline prices. He doesn't want to shake up the market. And while the movement to sanction Russia is to put pressure on Moscow to end the war in Ukraine, he also doesn't want a surge in oil prices because that will hurt his base. I think Trump is really looking at gasoline more than any other president perhaps before in terms of where the prices are, and he cares a lot about it. So in the past, he has brokered agreements to a degree with OPEC Plus to increase output. Now, whether he's going to be able to do that, very unclear, but I think any sort of broad agreement or view on the market, especially later for 2026, would be interesting in those meetings.
Yeah. Stephen, thank you so much for being with us. Stephen Stapczynski leads our team covering energy in Asia. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
China is about to unlock a huge African iron ore deposit that risks upending the global market. The size and richness of the Simandou deposit in Guinea could shift the industry's power dynamics and help to transform the country's economy. Our metals and mining reporter William Clowes joins us now for more. Will, tell us first about the scale of Simandou and its potential impact on the global iron ore market.
Hi, good morning. Yeah, so Simandou in Guinea is a really famous name in the mining world. It's a very large iron ore resource in a remote mountainous part of West Africa, which Bloomberg was able to visit in September. It's often described as the largest untapped iron ore deposit in the world. So Simandou finally entering the supply chain after all of these years is a really important development for the steel industry. Iron ore is used to make steel. Because over the next 2.5 years, the project's owners, Rio Tinto and the winning consortium, will increase their combined production to 120 million tonnes a year. That's equivalent to about 5% of total global output last year. And it's important for China's steel industry in particular, because Rio Tinto used to hold the rights to the entire Simandou deposit, but today it only has a quarter share, and most of the project is owned by Chinese companies. And this comes at a time when China, which is by far the world's biggest steel producer, is trying to gain more influence over the price of iron ore and to curb the power of foreign mining companies like BHP and Rio Tinto.
That's interesting.
So yeah, this massive new supply of high-grade, mainly Chinese iron Chinese-owned iron ore will help China with that endeavour.
Yes, that will be very important given, Rio Tinto has been involved in the project for almost 30 years, but as you say, the Chinese firm's so important. Simandou then finally going to start actually exporting iron ore in the next month or so. What actually brought them over the finish line then when this project has been in the works for so long?
Two key turning points, I'd say. First, in late 2019, when this Chinese-Singaporean group, Winning Consortium, was awarded 50% of the project that had been taken from Rio Tinto. That development provided real momentum for the project, since Winning was really committed to moving fast and at scale, and all of those massive costs on infrastructure could now be shared. And the second really important moment was mid-2022, when the Guinean government pushed the two groups to work together and form a joint venture. And despite being very different companies, and that agreement could be considered like the final hurdle finally being cleared and unlocking this investment that tops $20 billion.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.